let's say I'm paying a rent of about $3,000 a month, and I want to replace that with a mortgage. What does that really look like in terms of home value? Can you give me a ballpark, and maybe we could talk about sort of the adjustments you should be thinking about when we talk about tax payment saving, tax deductions, mortgage interest deductions, and equity and the fact that you're getting that equity in the principal payment. What does that really look like when we compare a $3,000 rent payment to a mortgage payment, and what is that getting me?
Yeah, I mean,
purchase price.
It depends on a lot of factors, obviously, depending on the taxes and insurance in the area. But, historically, you can take a conservative approach and say, okay, look, if I'm paying $3,000, I can be at a $300,000 payment or higher, depending on taxes and insurance, right? So, you take into consideration, most loans will take 42 to 45% of your gross monthly income and apply that towards a mortgage, right? Obviously, you have other debt on your credit report, credit cards, car loans, student loans. So if that goes over a certain percentage, historically it's 50, then you have too much debt. But that'll give you an idea. If you take, let's say, 42% of your gross income, then that's what traditionally, most products will, some a little bit more, some a little less, but that's the average, will use for a mortgage payment, right? So, most people can use that, that figure to get an idea of what they would kind of qualify for, right?
Now, but is that really an apples to apples comparison? Because in my $300,000, in that $300 a month payment you just mentioned, or $3,000 a month payment on a $300,000 mortgage, I'm also getting the benefit of mortgage interest deduction. I'm also getting the benefit of local state real estate tax deductions, and I'm also getting the benefit of that money not just being spent, but sort of put into a forced savings account, right? The equity on my house, I'm paying down the loan, which raises the amount of equity I have in that home, right? So what does that really mean? What if I'm transferring a $3,000 mortgage payment? Is that is that really like a $3,000 rent payment? Is that more like a $4,000 mortgage payment?
I mean, it's probably a little bit higher than that, right? When you take the things that you mentioned into consideration, right? Depending on your tax bracket again and all of these things, right? But yeah, I mean, it's not, as you said, Jason, it's not an apples to apples comparison, right? You have to take into consideration, starting with the tax ramifications and tax savings that you're going to have, right? So that you might be paying $3,000 now, but at the end of the year, you might be owing the IRS money or getting nothing back, right? And now all of a sudden you have a mortgage using that same, number, and then all of a sudden you're getting money back because you have, tax write-offs that you didn't have before, on top of the factor of the equity building. So I think that's where you were getting to.
Yeah, and I think just to kind of really make it clear, and I know being leading on this, but it's important to understand a $3,000 rent payment replaced with a roughly $4,000 mortgage payment can afford you a home close to $500,000. And you're really, at the end of the day, you're net even, except you're building wealth at the back end under the home purchase